I think it helps to take a little bit of a step back and just look over what's happened over the past years, right? If you look at the macro situation, finance, zero interest, end of, and all that kind of stuff, of course, it's had an impact on investment. A lot of investors now, why would you chase a risky bet if you can get secure interest and so on? So that's changed. The other thing that's changed is that the exit market froze. Generally, the model in VC works this way. You set up a fund, and in the first 5 years, you basically go out and identify companies who you give money to. The last 5 years, you in essence plow that money back into the companies that you have, because you expect to have your money back after 10 years. And the reason is because VCs on average get paid for 10 years. They get 2% of the fund for the first 5 years, and then afterwards I think it's 1%. It always depends a little bit differently, but they get paid either way. But at some point, the money runs out and the fund doesn't get topped up. So you can imagine if some fund is at 13, 14 years with the lifetime of their portfolio at this point, no one's getting any money, not the investors, not the VCs. The market's frozen. You can't quickly sell it to private equity because they're at the end of a long run of basically overvaluations. So they can't really get rid of a lot of what's on their books either. So this has frozen the market.